It is hard to say what the federal government's intentions are regarding the crypto industry, but based on its actions with SVB, Signature Bank and Silvergate Bank, it seems that it is not very supportive of it. These three banks were among the biggest lenders to the crypto industry, with a large portion of their deposits coming from crypto-related businesses and individuals. They also offered services such as custody, trading and settlement for digital assets. However, these banks also faced significant risks and challenges due to their exposure to the volatile and unregulated crypto market. For example, they suffered huge losses when FTX, one of the largest crypto exchanges in the world, collapsed last year due to a massive hack. They also faced regulatory scrutiny and pressure from federal agencies such as the FTC and the OCC. As a result, these banks failed to meet their capital requirements and liquidity needs, and were shut down by New York regulators in March 2023. This was a major blow to the crypto industry, as many crypto players lost access to their funds and services. Some stablecoins that were backed by these banks also lost their pegs and caused market disruptions. Many startups and crypto businesses used SVB's sweep accounts to invest their excess cash into money market funds or other assets. SVB had about $151.6 billion of uninsured deposits, which made up more than 90% of its total deposits. Uninsured deposits are those that exceed the FTC insurance limit of $250,000 per account. Some of these uninsured deposits could have been sweep accounts that were not eligible for FTC protection. The Federal Reserve also offered one-year loans to institutions that hold deposits at SVB's shuttered subsidiary Signature Bank, which was known for being crypto-friendly. These loans were meant to provide temporary liquidity support and prevent a run on other banks. These measures could be seen as a sign of regulatory hostility or skepticism towards crypto businesses, especially since Treasury Secretary Janet Yellen had ruled out a bailout for SVB, and said regulators were focused on the needs of depositors. Some critics also argued that the government was favoring SVB's customers over other groups such as student loan borrowers or taxpayers. The federal government stepped in to guarantee all deposits for SVB and Signature depositors, but this was seen as a bailout for traditional financial institutions rather than a rescue for crypto innovators. Many in the crypto community criticized the government for not doing enough to support or regulate the crypto industry in a fair and transparent way. This move was intended to backstop depositors and protect financial institutions from liquidity problems. States that uninsured depositors of SVB received a distribution of a portion of their uninsured amount on deposit at some point this week. They also received a receivership certificate for the remaining amount of their uninsured funds on deposit. The receivership certificate represents a claim against the assets of SVB in liquidation. The Federal Reserve also offered one-year loans to institutions that hold deposits at SVB's shuttered subsidiary Signature Bank, which was known for being crypto-friendly. These loans were meant to provide temporary liquidity support and prevent a run on other banks. Therefore, based on these events, some might argue that the federal government wants the crypto industry to fail or at least be marginalized by imposing harsh regulations, or allowing its key players to collapse. Others might contend that the federal government is simply trying to protect consumers and investors from frauds and risks associated with cryptocurrencies. Potential reasons why the federal government would not want the crypto market to succeed are: loss of control over monetary policy. Cryptocurrencies are decentralized and operate outside the influence of central banks and governments. This means that they cannot be manipulated or controlled by monetary policies such as interest rates, inflation targets, or quantitative easing. This could undermine the government's ability to manage the economy and maintain financial stability, threat to national security and sovereignty. Cryptocurrencies are global and borderless, which means that they can facilitate cross-border transactions and payments without intermediaries or regulations. This could pose a challenge to national security and sovereignty, as it could enable illicit activities such as money laundering, terrorism financing, tax evasion, sanctions evasion, cybercrime, and espionage. Lack of consumer protection and investor confidence. Cryptocurrencies are volatile and unregulated, which means that they expose consumers and investors to high risks and uncertainties. There is no legal recourse or guarantee for crypto users in case of frauds, hacks, scams, or losses. There is also no clear framework or guidance for crypto businesses to comply with laws and regulations. Environmental concerns. Cryptocurrencies consume a lot of energy and resources to maintain their networks and validate transactions. For example, Bitcoin's annual electricity consumption is estimated to be more than some countries such as Argentina or Norway. This could have negative impacts on the environment and climate change. These measures could be seen as a sign of regulatory hostility or skepticism towards crypto businesses, especially since Treasury Secretary Janet Yellen had ruled out a bailout for SVB, and said regulators were focused on the needs of depositors. Some critics also argued that the government was favoring SVB's customers over other groups such as student loan borrowers or taxpayers. Some of SVB's customers were major players in the crypto space, such as Coinbase, Kraken, Gemini, Circle, and others. These customers could benefit from the government's protection of their deposits and continue their operations without disruption. One of SVB's customers, Roblox Corporation, was handed $150 million by the government after the bank collapse. Roblox is a gaming platform that has ambitions to create a metaverse powered by its own cryptocurrency called Robux. The federal government is not necessarily anti-crypto, but it has concerns about the risks and challenges that cryptocurrencies pose to the financial system, national security, consumer protection, and tax compliance. The federal government is also interested in developing its own digital currency that could compete with or complement cryptocurrencies. Various federal entities such as the SEC, CFTC, DOJ, IRS, and FinCEN have taken steps toward establishing and exerting their enforcement authority against businesses and individuals transacting in cryptocurrency. These entities have pursued cases involving fraud, market manipulation, money laundering, tax evasion, sanctions violations, and cyber attacks related to cryptocurrency. President Biden signed an executive order on March 9 directing the federal government to come up with a plan to regulate cryptocurrencies. The executive order recognized the popularity and potential of cryptocurrencies to destabilize traditional finance. The executive order also listed 6 priorities for crypto regulation: consumer and investor protection, illicit finance, financial stability, innovation and competition, national security, and international coordination. More to come as this story untangles from the SVB collapse.